the first job of any energy investor right now, to be honest, is to be absolutely totally focused on your existing portfolio, right? You
Yeah.
cannot, there is no room for error. These are very volatile times. Uh, we've seen this before. You know, we've invested in 2008, we've invested in 2014, 2015. These are very trying times. You've got to make sure that you're completely funded, your hedge book is right, you've got the cash flows, you draw down on your bank lines. We made sure, you know, the day, you know, when the crisis was kind of coming up, we made sure that we were completely funded. We pulled, we drew down on the bank lines, make sure that liquidity is there. You've got to then make sure that your partners, you often in oil and gas world, you work with partners. You want to make sure that your partners are well funded. If they're not well funded, you've got to be able to step into their place, because then you've got to then carry the project on your own. So for the next, few weeks, maybe, few months, we are absolutely razor focused on making sure that the portfolio is healthy. But coming on the other side of it, very confident there's going to be a fair bit of distress in the market. There is going to be a lot of opportunities, people exiting the space. And in 2015, one of the assets that we bought, and we bought it at a really good price, was owned by a Canadian mining company, which at the time of the oil boom had thought that they would become a diversified natural resources company, and therefore had bought an asset. And when the crash happened, they realized that they would have to actually spend a lot of money to keep the asset. So they said, we're going back to Canada to go back to our nickel mine. We don't want anything to do with this oil and gas.
Right.
And we saw, people exiting countries, non-core countries. And that's where we play, right? We've